China International Gallery Exposition. Dozens of the masters of Chinese contemporary art, with young artists from Asia and other emerging regions, multimedia installations, video works, available exclusively at Asia's most influential art fair, CIGE 2008, Beijing.
FXCM brings you the World Currency Update.
The World Currency Report is brought to you by FXCM. Experience superior currency trading with FXCM.
The JP Morgan Chase Corporate Challenge 2008 Singapore. Go online to register your entry. Teaming up for a greener tomorrow, the 2008 JP Morgan Chase Corporate Challenge will also minimize its impact on the environment.
You had a really great time?
I think it was great. This has been the largest turnout.
JP Morgan, doing first-class business in a first-class way.
The global financial market rout claims its first overseas investment fund in China. China Minsheng Banking's dissolved its QDII fund after its value plunged more than 50%. The collapse raising the specter there could be more in the wake of the market volatility. Minsheng's fund invests overseas on behalf of clients under the Qualified Domestic Institutional Investor, or QDII program. Four similar funds have posted combined losses of $1.7 billion in the fourth quarter. The news hasn't discouraged a NASDAQ-listed provider of outsourced asset management. SEI has just announced its initial foray into mainland China, teaming up with Yinhua Fund Management to launch its QDII fund. And here with more from Hong Kong is Bill Cassidy, Managing Director at SEI Investments Asia. Bill, good to have you with us.
Thanks for having us, Catherine.
Bill, why now, when the overseas markets are pretty much in a turmoil and we haven't seen the bottom of it yet?
Well, I think that over the long haul, we still see a lot of promise in the global markets, and I think that the big challenge for Chinese investors, and one of the challenges for a global advisor as ourselves, is to educate the investors to take a long view of the global equity, the global markets.
How do you educate at a time when most of the retail investors in China are already hurting? They've already lost so much from the investments they've made, not only in Chinese stocks, but in overseas investments with the QDII funds.
Well, I think it's an interesting time for intermediaries such as a bank, insurance company, or a fund management company to really change the relationship that they have with customers. Heretofore, banks, insurance companies, and fund management companies have really been facilitating transactions and providing very little advice. These have been good trading ideas. They've not been good portfolio management ideas. And I've been on the road for the past week and will be for the balance of the month until our launch, trying to educate investors that global investing doesn't automatically mean meteoric returns. There is some volatility in global markets, and the domestic firms are looking for experienced global advisors such as ourselves to help them steer them through the rocky waters right now.
So what do you tell them specifically? How do they steer away from these rocky waters?
Well, if an investor is looking for consistent long-term returns, downside risk, low volatility, diversification and asset allocation are going to be the drivers of those kind of results. investors are not going to get that kind of result engaging in market speculation or market timing.
So what do they do when they invest in your fund? Do they get into overseas equities, or is it a combination of sorts, like even bonds or maybe other funds?
Well, in this particular fund, what they'll have is some exposure to the domestic fund manager will expose them to some Hong Kong equities. About 40% of the portfolio will be in Hong Kong equities. About 60% of the portfolio, which is a portfolio, part of the portfolio that we manage, will be exposed to multiple global markets. And we'll be employing a fund-to-fund mechanism to construct that portfolio. And what they're doing is they're leveraging our experience as a global manager of managers to identify sources of alpha in different markets around the world. And we've been doing that for a long time for both institutional and individual clients.
Well, let me pick up on the Hong Kong market, because 40% of the money is going to go into the Hong Kong equity market, which have pretty much lost a whole lot. I mean, it's down about double. It's one of the biggest losers in the market and in the region's financial markets since the start of the year. How do you convince them that they'll make money out of the Hong Kong equities market?
Well, I think, again, you have to go back to taking a long-term view of the global markets, and Hong Kong is a component of that. You have to explain to investors that it may not happen overnight, and it's going to take some time. But if you believe in the allocation of your portfolio toward global investing, if you believe in the global markets, that you have to, you cannot discount the mainland Chinese market or the H-share market as an allocation in that portfolio.
And 60% of which is going to go into the global stock markets. Which ones?
Oh, we have some exposure to the UK, we have some exposure to Western Europe, we have some exposure in the US. So we'll manage that allocation on an active basis every month, and we'll take a look at it and adjust it as needed.
And it also helps to know that the asset managers are pretty much getting the bulk of QDII demand so far, or whatever's left of it, versus the banks. I mean, how do you see the competitive landscape changing as this progresses?
Well, if you mean by that the banks are struggling and the asset managers are having more success, I think that it depends on the design of the product, not who's delivering the product.
And do you think that it's going to be a pretty competitive landscape, like people are going to be preferring more of the asset managers than the banks?
Well, I think they have to look at the underlying product, not who's actually sponsoring or distributing the product. And I think investors are going to, I think the intermediary, whether it be a fund manager or a bank, are going to be challenged to explain to the customer what exactly is in the underlying portfolio, and make the decision based on the underlying portfolio.
Now, I ask because there is some concern that there could be another Minsheng in the making, another sort of a QDII fund going bust here, just like Minsheng's fund. Are you not concerned?
Well, I can't answer for what challenges China Minsheng Bank experienced in their product, but I think the challenge for the offshore advisors and the challenge for the domestic intermediaries is to educate customers as to what's in the portfolio. And global investing, and there are some certain risks that come with global investing, and if that allocation of your portfolio is consistent with wanting to take those risks, I think you're going to be okay. But you just have to let people know what's in there.
And be in there for the long haul and make that very clear in this global equity market environment. Thank you so much for joining us, Bill. Do appreciate it.
Appreciate it.
Okay, we'll be back in just about 3 minutes. You're watching Bloomberg Television. Stick around.